Good morning, everyone. We'll start the session in another minute. Still participants joining. Yeah, I think it is good to go. Good morning, everyone. Welcome to Prepare with Vodafone India. This is Rajasekhar Kongari, Equity Research Analyst at Vodafone India. I'm a part of MarketSmith team, which manages MarketSmith India's model portfolio. Let's get started with this podcast. Let's discuss about the Nifty daily chart, how the Nifty is placed and what are the levels we are looking at. If you have been following our mailers, you would have already known that on Monday, that is Nifty made a low of 15,183 level. That is very crucial for the Nifty to hold. Monday was considered as day one of rally because even though it breached Friday's low, it closed in the upper half of the day's range. Hence, it was considered as day one of attempted rally. And yesterday, market was after opening a flat to negative basis, it closed on the higher end near the day's high, and it didn't breach the Monday's low. Hence, it was considered as a day two of attempted rally. Since we are in a downtrend, it is very crucial to identify the bottom Nifty is making. So we are not going to just take random guesses or try to find a bottom. We are taking a data-driven approach to find the bottoms, right? So this identifying day of attempted rally and day two of attempted rally will give. Sorry. So this approach of identifying day one and day two and Nifty not reaching the day one slow is very crucial, and it is a data-driven approach that we are following to identify the bottom. Because when the market is in downtrend, we are not sure when the market is going to bottom out or when the market is going to show a upward trend from where. So it's very crucial to follow a data-driven approach. So in today's session, if the Nifty closes above or it does not reach the 15,183 level, we'll consider it as a day three of attempted rally. So as the Nifty was above for the three sessions, so we'll consider this as a near-term bottom for the Nifty. From the after day three, we'll move the market status to rally attempt. From rally attempt, we will look for a follow that is 1.5% or more on volume higher than the previous session. That follow through day signifies that upward trend is about to start. So big leaders are big companies, large cap companies, and leaders in particular sectors will try to form the right side of the base pattern or reclaim their reclaim their key moving averages. At this present moment, most of the stocks are trading below their key moving averages. That is the reason we are not adding stocks to our model portfolio. When the market moves to rally attempt and follow through day happens, most of the stocks will reclaim their moving averages, and they'll also start to break out from their base patterns. Upon moving the market status to confirm the trend, we'll start adding stocks to our model portfolio. Until then, we'll wait for the market to bottom out and give a clear trend. Key news during the after closing of yesterday's market, Swen Life and Finotech's Chemical are about to meet on June 24th to decide upon raising fresh funds through rights issue, and that is by Swen Life through rights issue, and Finotech is considering upon issuing equity shares. KC International, which is a major construction company, has backed nearly new orders worth 1,090 crores across its various businesses. Vodafone Idea has a good positive news, that is Vodafone Group, which is a British company, parent company of Vodafone Idea, is about to invest 500 crores into the company through equity or convertible warrants. So this might give a good push to the stock price in today's market. Foreign institutions have been continuing to exit the Indian market. They have sold 1,200 worth of equities yesterday. However, DIIs, that is domestic investors, institutional investors, have given good support. They have bought more than 2,000 crores of worth of equity. That is the reason Nifty closed at the higher end yesterday, because of support given by the domestic investors. And yes, market was closed yesterday because of Juneteenth holiday there, domestic holiday. So there was no action on US markets yesterday. Asian markets are trading fairly above in the green level, except for Shanghai market. Kospi 0.4, Nikkei 0.8% higher, significantly higher. Talking about crude is trading at $116 per barrel. So as long as Brent crude trades above $105 per barrel, it will be difficult, or it will be having negative impact to our finances, because RBI has estimated average price for the next year to be around $100 and $105 per barrel. So anything above that level will impact our rupee and fiscal deficit as well, because we are major importers of crude oil. And US 10-year bond yield is trading at 3.3% yearly. So because of downturn in the equity markets, investors are moving funds from the equity markets to the safe haven assets like bond yields, because they have backup of US government. USD INR it is trading at 78, nearly 78. Again, it is also nearly at all-time lows. It is negative for the Indian economy. We would want the rupee to show strength against US dollars. However, it is weakening in the last 1 month or so. It is bad for the economy. And talking about the SGX Nifty indication, it is indicating a slightly positive opening, muted to positive opening. Nifty closed nearly 15,350 yesterday. So 50-point higher opening might be seen today according to SGX Nifty. And also the Asia markets are also trading at a higher zone. So we might expect Nifty to also operate a higher zone and continue to trade in the green as the session progresses. Sector coverage, this is the sector placement after yesterday's action. You can see most of the sector indices starting from Nifty, mid cap, small cap, and realty, bank, most of them are in correction. That indicates the ongoing sell-off in the market is a broad-based sell-off, not just sector specific or any stock specific sell-off. None of the sector indices are in rally. Again, that is also very bad. So it's a broad-based sell-off that is happening in the market. Only FMCG is in rally attempt, slightly compared to other sectors. FMCG is placed at the good placement compared to other sectors. And you can see here all these sectors are trading below the 50 and 200 DMAs, again indicating a broad-based sell-off in the markets. Thanks for joining today's people. Have a good trading session.